is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott. Andrew Young is off today. He's at a wedding out of town. We have a really terrific guest today who is going to help shine some light on the state of crypto, the whole industry as a whole, because I think this person has a really unique perspective. Mauricio Di Bartolomeo is one of the co-founders of Ledn, which is one of the leading lending platforms in the crypto asset world. Last year, there was quite a tumultuous period of time where several platforms went under, mostly because they were taking in deposits and making very bad loans. And when those deposits, depositors asked to take their money off, they were unable to satisfy those kinds of redemptions. Ledn is a company that was an exception in this case and actually did really well throughout this whole period. And we're going to learn a little bit more about what lessons and takeaways there were from that experience that maybe the whole industry as a whole can learn. And then also to talk about a little bit what the future of sort of centralized lending and on-ramps and off-ramps and other sort of intermediate players in crypto is going forward, and how that fits into a longer sort of thesis of decentralization and DeFi. But first, Mauricio, it's really great to have you on the show. Thanks for joining us.
Hey, thanks for having me, Alex. I've been following your work for some time, so great to be here.
Well, thank you. I appreciate that. So you have a really interesting biography. We like to ask people about their background and how they got into this space. And in your case, you have a unique perspective. So why don't you tell us a little bit about your background as an individual and then how you ended up getting into this space and starting this business?
Sure. Yeah. It's something I'm quite passionate about, so I'm trying to keep it concise. So I'm originally born and raised in Venezuela, which is a place many people know now. They used to know us for having lots of oil and beautiful beaches and beautiful women, but now most people know us for authoritarian dictatorship and hyperinflation, which is a change that I saw sort of happen throughout my life. I got into Bitcoin back in. It was my family who first got into it. We as a family got into it in the summer of 2015. And the reason we got into it was because my youngest brother, who had graduated at the time, was looking to start a business. And my family adamantly wanted him out of the country, but he refused to leave the country. And he kept trying to pitch ideas to stay in Venezuela. And he continuously pitched ideas that we didn't think were viable until he kind of puts his foot down and presents my dad with this idea of mining Bitcoin. And he says that either we support him or he's going to basically run out of the house and do it on his own. And my dad then sends me the white paper and the link to Bitmain. And he asks me what I thought about it, because I just finished finance. I went to the Richard Ivey Business School at the Western University, so I was a business guy. And my dad sends me the white paper and says, "Can you help me do some diligence here? What do you think?" So that's when I first read the white paper. And to put some context into the situation, Venezuela was going through the worst hyperinflation it has ever experienced. The Venezuelan dictator at the time had died. Hugo Chavez had died, and his party had basically stolen the election that came after his death. And at the time, the country was going through a collective sigh, and all of my friends were liquidating their assets and figuring out where they could migrate to based on their great-grandparents' passports. Right. So it was a very sort of, it was a very, very sad time in the country. Yeah. And in this context, my brother says, "I want to start a business here." And of course, my father and everyone else in the family was highly skeptical. I read the white paper, and what I saw when I read the white paper was Bitcoin mining used the two main inputs in Bitcoin mining were energy. They used a lot of energy. They used an internet connection, the hardware, and the output of this was a Bitcoin or Bitcoin that you could sell. So the way I saw this in Venezuela, hydro power was heavily subsidized to the tune of, a large 3 to 4 bedroom house was paying $1 a month in electricity, just to kind of put it in perspective. It wasn't free, but it was virtually free. So was internet. And the way I read this was, you were going to buy this machine that takes subsidized inputs and produces this good that can be sold globally for dollars. Yeah. There was no other good in Venezuela that could be sold for dollars, that you could produce in Venezuela that you could sell for dollars because of the strict capital control. So this made the proposal very, very appealing. So I greenlit the project, said to my dad, listen, this seems like a sound idea based on the inputs and outputs. My dad then approved my brother to get a few machines, and my brother goes on and starts mining in the middle of 2015. Fast forward December, Christmas later that year, I fly down to Venezuela to visit family, and I see him. And my brother is the only person in Venezuela with a smile, where every one of my friends is liquidating assets and literally trying to leave. And my brother's looking for places to rent. And so I go and I confront him, and I asked him, what are you actually doing? He says, I'm mining Bitcoin. And I said, show me. He says, give me your bank account. So I shared my local Venezuelan bank account, a bank called Banesco, that some of you may not know or may know. And he then he says, I'm going to send this Bitcoin to this exchange, and I'm going to convert it to dollars at the fair market rate of dollars to bolivares, and I'm going to get you the bolivares in your bank account. And within an hour, Alex, he had sent the money to an exchange called Sir Bitcoin, which was great at the time in Venezuela, converted the Bitcoin into bolivares, the bolivares hit my bank account. This is in a country where you could not legally go out and buy a dollar or sell a dollar or transfer a dollar or hold a dollar in your bank account. So when I saw him turn Bitcoin into dollars and dollars into bolivares at the fair rate in this dusty room in the most hostile economic environment that I have ever been a part of, that's when I went down the rabbit hole. It was in that precise moment that I understood the potential that Bitcoin had. And from that moment on, I haven't been able to stop thinking about it and wanting to work in this space. And so that was the beginning of my journey.
Amazing. So this is 2015. It's been almost 8 years, and now you're in Toronto, Canada. So how is it that you came to move to Canada and, I don't know, apply this kind of lesson from this profound experience to building your own company in the space?
Yeah, it's a great question. So the way the transition occurred was he started mining and he started doing very well for himself. And of course, very quickly, we wanted our friends and family to do this. And we didn't even have to tell them. They came and asked us, and they started doing it on themselves. So within months, my best friends were mining, my aunts, my uncles, my cousins. Like my dad was a miner before I was a miner, to give you an idea. So everyone in my family was mining. A lot of my circle was now mining, and I was starting to get inbound questions from friends all over the world to help them set up mines. So I had friends in Florida because I did high school there, and I had friends that had moved to different parts of Latam because of the migration crisis in Venezuela. So people were reaching out to me trying to figure this out. And so we started helping people set up their mines, both in Venezuela and in everywhere we could. As we do this, we keep running into the same issue. Everybody starts doing really well. They want to grow their mines, but the only way to grow their mine is to sell their Bitcoin, to buy more equipment. As you know, the Bitcoin mining equipment had a very long lead time, and Bitcoin price was appreciating very rapidly during this time. So often people were paying their Bitcoin at the beginning of the year to get the machine at the end of the year. And in between that period between they paid and they got their mining computer, the price of Bitcoin had 3x. So they lost all of that upside. And by the time the machine came, the economics weren't the same. So everyone I helped set up a mine eventually wanted a product that would allow them to get liquidity from their Bitcoin without selling it, a loan backed by their Bitcoin.
Right.
To my great surprise, nobody was offering this service. And I realized very early on that I couldn't create a scalable business in Venezuela because of the conditions that Venezuela was in. There was not a world where you were going to get a great world-class company built in a country like that. So I had done my university in Canada, and I came to Canada with my now wife to try to figure out a way to being a part of the industry from Canada. And because what I knew what to do was to mine, I convinced my best friend from university, Adam, to set up a mine in Canada. And quickly, we realized that Canadians had the same issues that miners in Venezuela and Florida and all over the world, where they wanted to grow their mine. They didn't want to sell their Bitcoin. So we went trying to ask for a loan. And people laughed us out of the room. They said, Bitcoin's not an asset. Bitcoin's not an asset. Who would ever do that? And by the third... What
year is this, may I ask? When you decided...
This was late 2017, early 2018.
All right.
And at this point... Yeah, people were laughing us out of the room, and there was one group that was offering this service at the time, but you had to buy the platform's tokens to get the loan, and it didn't really make sense. We both come from a traditional finance world, and we didn't like this. You didn't have to buy stock of TD Canada Trust to get a loan from TD. You didn't have to buy anyone's token or stock to get a loan, that seemed ridiculous, still seems ridiculous today. So we wanted to have a very simple and very boring proposal, which was you don't need to buy our token. You just show up with your Bitcoin collateral and we will fund your loan based on the value of that Bitcoin collateral. So it's a very simple premise. And Ledn was created with a very simple idea. We lend so you can hodl. So that's why the name is Ledn. And the idea is that we will take your Bitcoin as collateral and issue you a dollar loan. And we underwrote Canada's first Bitcoin-backed loan in November 2018. Since then, obviously, it's not just Canadians that have these issues. We've helped thousands of clients all over the world. We've processed over $600 million worth of loans for clients around the world. And it's been a sort of a great journey where we have been able to help a lot of Bitcoiners not sell their Bitcoin and be a lot better off because of it.
Amazing. So, I mean, you hear these stories sometimes of, well, we wanted to do it, but then we found that there wasn't somebody there who could help us. And so we decided, well, that's the business, right? It's like almost one of those epiphanies you have. It's like everybody needs this, but nobody's providing it. And we could be the group that does that. So 2018, you're underwriting your first loan. At the time, the borrowers are miners, sounds like it, predominantly, but over time, Ledn becomes a platform that allows anyone who owns Bitcoin to get a loan against that Bitcoin and to do other financial services as well. So where maybe today, like putting aside the tumult that we've seen in the market, just today, what is the business that Ledn is in?
So it's the same business. So we lend dollars backed by Bitcoin collateral. And of course, by having a product that allows us to lend dollars to Bitcoiners, we also were able to create a facility that allows people to earn interest in dollars or stable coins. So the first product was dollar loans backed by Bitcoin. Yeah. Then people said, I don't need a loan right now, but I would love to earn some passive income on my Bitcoin. Can you earn interest for my Bitcoin? Yeah. So we had institutions on the other side asking us for Bitcoin to market make. And so we saw an opportunity to create another product, which was a passive income product where people would earn interest under Bitcoin, and then we would lend that Bitcoin out to institutions. So that's the growth account. So now at that point, Ledn had a lending product and an interest product. Yeah. Then we had people that want to earn interest in stable coins because stable coins started getting very popular. So we could use those stable coins to fund our own Bitcoin-backed loans. So we created the stablecoin savings account, which is now called the stablecoin growth account. So now you have two products where you can earn yield, both on Bitcoin and stablecoins, and a product where you can borrow dollars. Then we saw a lot of our clients borrowing dollars to buy more Bitcoin. So we created a product that did just that takes the Bitcoin you have, gives you $1, and buys an equal amount of Bitcoin. That's called B2X. So that became our most popular lending product. And from there on, people started using our loans for all sorts of things. Namely, in North America, they started using it to diversify their Bitcoin holdings into real estate. So many times our clients came to us and said, Mao, I have a lot of Bitcoin and I'm going to the bank to get a mortgage to buy this house. But because I don't have a W-2 or a T4, because I'm Bitcoin retired, the bank won't let me money for buying a house, even though that I have all of this Bitcoin. And we said, well, you can take a Bitcoin-backed loan and buy the house. And they said, sure, I'll do that. And I'll try to go get a mortgage once I own the house on paper. So they did that. They went to the bank. The bank still did not give them a loan. And they came to us and said, will you take the house as collateral for my loan so that I can take less Bitcoin, use less Bitcoin to buy the house, and maybe I can use that other Bitcoin to take another Bitcoin-backed loan and buy something else. And so many clients came up to us asking the same question that we then created the Bitcoin mortgage. So that's a product that is live in Ontario and allows you to bring a set amount of Bitcoin to purchase an equal amount of real estate. So if you have $1 million worth of Bitcoin, you can buy $1 million property. Both become collateral for the loan that you take. So that's the birth of the mortgage. And then since then, we created what's called the DCN, which is our dual cryptocurrency notes, which allow people to earn interest, not based on lending activities, but based on probabilistic outcomes of Bitcoin being in a particular price and a particular date in the future. So it's really about adding solutions for everything related to lending or yield. So at Ledn, we specialize in anything that is yield or wealth management related. So if you want to earn passive income on your digital assets, we got you. If you want to borrow against your assets for tax optimization or to diversify into another asset class, we have that for you too. If you have a product that you would like to use to potentially buy or sell your into a different asset and earn yield while you're doing so, we have that for you as well. So that's what we don't have is this plethora of speculative tokens that you can come in and trade at Ledn. That is not the business that we are in. We have we like to say that the best restaurants have the smallest menus. So at Ledn, we do a few things, but we like to do them better than anyone.
I love that. And I'm curious then, so is it only Bitcoin, the only crypto asset then that you're lending against? Or
so we support Bitcoin today. We support USDC stablecoin. We will soon be supporting Tether, the stablecoin that obviously everybody knows Tether. And then later on this year, we will also be supporting Ethereum on the platform.
Right. Okay. But generally speaking, sticking to large liquid assets rather than like going down the chain. I think it's interesting.
Correct.
Let's talk for a second about the mortgage, because to me, this is an interesting way in which we're creating financial products and services that are used in the real economy, backed by crypto assets. And so what you're describing is a world where someone who's already wealthy in Bitcoin terms, but their wealth is not acknowledged or recognized by the bank, is coming to you as an alternative lender. And I think that's really interesting. So let's say someone does buy $1 million house. Most people who buy $1 million house don't have $1 million of liquid assets. Usually they have $250,000 of cash. And like in general, I'm generalizing, but so in this scenario, you've got someone who's wealthy in Bitcoin terms, but then when they get the $1 million loan, it's collateralized by both $1 million asset and $1 million in Bitcoin. So in a way, it's collateralized 2 to 1. And that's a way to, I guess, create a big buffer for you for the volatility that's inherent in Bitcoin. Now, you could also probably just hedge the risk. But I'm wondering if by being just over collateralized, that is enough for you. Like, are you, and then otherwise, are you taking like price exposure on the Bitcoin? So I guess that's sort of me just thinking through a couple of ideas. But one is, do you see your role in a way as creating more connections to the real economy and to other sort of financial like transactions that people need to do? And then separately, like, how do you think about risk and directional price movement in Bitcoin itself?
Yeah, I think you nailed the first part. So that is exactly where Ledn shines brightest, is we will help you convert your digital wealth into a real world experience or a tangible real world benefit. So Ledn is the sort of connector between you showing that you have 3 Bitcoin on this app or on your wallet, and the car that you wanted is in your driveway because you were able to take a loan and keep the Bitcoin ownership and convert that proceeds of that loan into a car. It's how you convert, dozens or 100 Bitcoin into your dream home. Without Ledn, you wouldn't be able to do that, or you would have to go through many more hoops and the process be much more tumultuous or a lot more work for you to do this. So where we will play, or we will continue to play, is by allowing you continuously to convert this digital wealth into a real world experience. So whether it is through the mortgage, by buying the house of your dreams, through a Bitcoin backed loan, for paying for your house, we have people that use our loans for things like paying for emergency pet surgeries or tuition. It varies broadly, the use cases that people have, but in any event, they are taking digital assets to solve a real world problem, or to take advantage of a real world opportunity. So definitely bang on. You've nailed it as to what Ledn does in terms of how it helps people. Then on your second point, on the point regarding the Bitcoin price exposure. So when we do collateralized lending, there's obviously trade-offs to all types of lending, right? In the collateralized lending world, the trade-off is that you are taking only the asset that you're taking as collateral. That is your only guarantee for the loan that you have underwritten. Therefore, you have to be very good and sharp or precise in ensuring that the amount you lent never is more than the value or market value of the collateral that you are holding, right? Mm-hmm. So our loans, because they only take Bitcoin as the collateral, there is a price risk when you take out a Bitcoin-backed loan, which is that if the price of Bitcoin drops such that the value of your collateral gets close to the dollar value that we've lent to you, Ledn has to, by policy and by design, has to sell as much collateral as is needed to settle the outstanding amount of your loan, and returns any additional collateral back to you. And that is very important to maintain the integrity of the business overall. And it's something that is there to protect both the borrower, the lender, and everybody, because we've seen now what happens when companies play games with the risk management and they're not upfront about the risk management. So at Ledn, we've always been almost to our own detriment upfront about the potential risks of this, because we want people to plan. We want people to come out of Ledn with more Bitcoin that they came into Ledn with. And the only way to do that is for them to understand how the product works and what are the potential outcomes and what they need to have ready in the event that more collateral is needed. We have an option at Ledn, for example, that's called the auto top-up feature. What this feature does is that you can pre-authorize Ledn to transfer assets from your transaction account to your loan collateral address. If the market moves when you're asleep or traveling, or you're not ready to get to your computer, you can even pre-authorize us to move balances from your transaction account to your collateral account, so that we can try to protect you or help you protect the loan as best as we can. And of course, we understand that if you want to top up collateral, you want to have the option to take some of that collateral back if the market recovers. You can do that also at Ledn with our collateral rebalancing feature. So we've thought through a lot of the pain points and how to best help our clients protect and plan so that they can have a great experience. Because the point here is not to tell you about all the good things and not tell you what could go wrong or how you would need to act in the event the price goes against you. Our job here is to get you as prepared as possible so you can get the most out of the product without catching yourself overexposed.
Interesting. So that's Bitcoin. I like that idea. And like everything you've just described makes a lot of sense. The other part that I'm curious about is the stablecoin product, because, right now, like there's a stable coin that you can buy called like the dollar, and you can buy like a money market fund, or you can put your money into like a CD or whatever, and you can earn like 4 to 5.5% right now. So I wonder, and that's like a reflection of the fact that since companies like Ledn and others launched, interest rates have gone up materially, right? Like during COVID, they were at 0, and now they're at like 5%. And so right now I'm wondering, like, if in 2020, 21, if someone was offering me, 5% on my stablecoin holdings or 5% on my Bitcoin, that'd be really attractive. But today, given the fact that those kinds of yields and even like real yields are now available, because inflation's come down a little bit, is that sucking interest away from what you guys are doing, or are you offering higher rates, or is it a different customer base, or am I just reading the situation wrong? Like, can you sort of tease out that situation?
Definitely. So yes, I think you've partially touched on a lot of the reasons that, or a lot of the things that I think are happening, a lot of dynamics that are happening. So as you mentioned, we as a interest-paying product or a yield-paying product, we compete against other yield-paying products, including treasuries, including government bonds, right? So for our North American clients, our US or Canadian clients, or even some European clients, where you have a trustworthy or a central bank that you feel that you can trust, which you could probably count them in one or two hands around the world. There aren't that many central banks that people feel like they can trust. And again, I see it's OECD countries at best. But for example, for the clients that used to come work with Ledn when rates were 0, of course, Ledn's 9% looked incredibly attractive. Today we pay 8.5%, which is still almost double what you can get in the treasury markets. But then again, treasuries are what they like to call themselves risk-free, although we can debate that, but that's how they pin that deposit. And people in North America or parts of Europe have in some cases, withdrawn balances from places like Ledn and put them into treasuries for strategic reasons. They'll still have a balance with us, but they'll have some other balances in treasuries. And that is true, like I mentioned, in about a handful of countries or perhaps OECD countries and the United States. But where I'm from, Venezuela, or anywhere else, even in Mexico, like go ask a Mexican person, even a high net worth Mexican person, how easy it is for him or her to buy treasuries. It's not that simple. Not everybody has access to treasuries, and especially through a broker that they feel like they can trust. So as interest rates have been going up and real yields have been improving in certain parts of the world, you're also getting the Argentinas of the world, where the country is fully collapsing and there's absolutely zero trust in the local system. So that, in some ways, it always ebbs and flows, right? Like you'll always have countries where rates are improving. And for example, like I'll give you the example of Mexico. The Mexican exchange rate has been getting better. The interest rate has been healthy. Mexicans haven't really been suffering from way too much inflation. But Argentina has been getting pounded. Chile has been getting pounded. Colombia has been getting pounded. Venezuela never stops getting pounded. So these are countries that it really depends on where you are in the world.
Yeah, so that was the blind spot, which is that the reason why stablecoins themselves are so popular, because people like naively say, oh, I can, we're in Canada, like, oh, you can send money using Interac, or in the US with Venmo. It's like, yeah, try doing that if you're living in one of the countries that you're describing, or frankly, any other part of the world. And what's interesting to me is that, like, what stablecoins have shown is that one of the kind of best product market fits for crypto is, ironically, the US dollar. And to me, I find that very amusing, because this is a technology that was first created in part to reduce the need for intermediaries and central banks. In essence, like if you read the white paper and the other early writing about Bitcoin, what it's done is actually like turbocharge certain assets, as you described. Like obviously earning yields, if you're earning 10%, but your inflation rate is 50%, then you're obviously losing real wealth. But at least in the case of the US right now, there is a positive spread. And so I think, if the US dollar as a payment tool or as a value storage tool is a really important use case, then obviously the ability to earn returns on those dollars is yet another improvement on that, or yet another killer application for it. Or to try and put it more succinctly, everybody in the world wants a US dollar bank account, and everybody in the world wants a US dollar investment account, right? And so if you're unable to access that through traditional means, then this is really attractive. So maybe that's a good segue into another question, which is that, you're based in Canada, but your client base is everywhere. Can you describe like what's the breakdown of Ledn's customer base?
Definitely. So just to make a point on what you said, the idea that Bitcoin or digital assets basically removes gatekeepers, a lot of people don't understand how many gatekeepers there are on the US dollar. And the fact that through crypto and Bitcoin or crypto rails, you can effectively eliminate the fact that local banks, no longer are able to gatekeep a digital dollar. In the past, before crypto rails, the only way that you can transact with the digital dollar was through a gatekeeper, through your local bank. For example, like it was very difficult to send a dollar payment out of Venezuela if you didn't do it through a bank. Stablecoins changed that dramatically. And that is reflected in the adoption and the excitement around the world for stablecoins. Now, going back to your point about where Ledn's clients are from. So in our early days, because I'm from Venezuela and we were the first ones to do these services in Spanish, we saw that a lot of our loan activity went to Latin America. So I would say for the first 2 or 3 years of Ledn's history, we had about 40 to 50% of our loans all go out to Latin America. And most of the yield or sort of savings balances were coming from North America and Europe. Today, that is a lot more evenly split. So I would say today our business is split between, I would say 30% North America, 30% Europe, 30% Latin America, and 10% Asia. So that's kind of a rough breakdown of Ledn's business. And Asia is actually getting increasingly bigger, and so is Europe. And of course, no surprise, the area that's getting smaller is North America. But that's largely because of, our ability to service certain countries and offer products into certain regions. So it's, the products that we're able to offer in places like the United States and Canada are fairly limited relative to the products that we can offer to places like Latin America, Asia.
Yeah, interesting. Well, I mean, it makes sense that an asset class and technology that is globally accessible should have businesses built on top of it or using it that are also global in nature as well. So right now, we've talked a lot about all these reasons why people would want to use Ledn, and as a result, that's reflected in your business. But there are also decentralized tools that exist that perform similar kinds of provide similar kinds of services, I guess. Like if you're using a lending pool and you've got crypto, you can basically stake it in exchange, get a loan that allows you to go do whatever you want. But, should the value of your collateral decline to below a certain level, you might find that, you're getting liquidated and that loan gets called. But it's all happening kind of automatically using a smart contract versus like using a company that sits in the center of it. So what are the advantages of the centralized model? What are the limitations of the centralized model? And do you see yourself integrating more into DeFi?
Yeah, it's a great question. And the way I like to answer that is I think DeFi and CeFi, centralized and decentralized services, both are relatively better at doing different functions. And I think they complement each other and they will each have a space in this industry. And I'll explain what I mean. So what we do better, or what we do really well as centralized group, is we can underwrite credit, we can match funding and lending sources. We can think longer term, right? Because we can match the different sources of capital that have longer durations with needs of borrowers that have longer durations. Take a mortgage, for example. Somebody's going to want to have a fixed rate on the mortgage. I think especially after the current environment, people are getting a little sensitive to having long-term commitments on variable interest rates, given what we've seen can happen, right? So what centralized lenders can do very, very well is offer fixed rate and fixed term lending solutions for real life expenses or use cases, like buying a house, paying for a car, paying for tuition. Anywhere where you need long-term visibility for capital, CeFi will tend to do better than DeFi. Why? Because if you want to programmatically run everything should be variable, right? Because if funds are coming in and out and your utilization of that pool is coming in and out, it has to be able to update in real time. Yeah. And in order to update in real time, you have to keep most elements variable. So there have been attempts at some DeFi protocols that are trying to hedge out some of those risks and provide a more fixed term solution, but none of them are operating at scale today. What DeFi does very well is it can issue a loan that somebody's going to use for 30 seconds, like a flash loan, or a loan that somebody needs to have for 3 days. For whatever reason it is, you need to have a loan for 3 days. A centralized entity has a very hard time underwriting credit for 3 days, right? It makes little sense for a centralized entity to get into that kind of business. Yeah. If we were to do that, we could offer potentially a short-term lending pool or a short-term lending vehicle that will operate variably and that will have a lot more DeFi. And that's, to your point, how I see if Ledn wanted to get more into DeFi, we would potentially try to adopt some of the technology that allows us to do some types of lending more efficiently, right? The other thing that I'll say is that there are risks and benefits to both, right? Like we have seen how centralized entities have had their issues. Of course, we saw last year, if there's no sound risk management, if there's flat out fraud, you're going to have some bad outcomes. Conversely, in the decentralized world, you see a lot of bridges get hacked. It's almost like every month you turn on the news, or every week you turn on the news, another bridge got hacked, or another DeFi protocol got exploited or drained. And the second you thought that all the blue chips were safe, then you get a curve exploit. And so it's very difficult. And again, I say this more as a student of history than as pretending to know the answers. The reason that the legal system exists today and the reason that laws can get updated is because laws can get outdated, right? And it becomes very difficult for anyone, any human, to code every foreseeable outcome in humanity and put that into a smart contract. So there is a risk of obsolescence of the code. There's lots of trade-offs, right? Like with Ledn, when you're interacting with us, you have a legal agreement, you have an entity that's registered in a country, you have a chief compliance officer, you have a court system that will take your demand, or they will, if Ledn does you wrong, you can go put your claim somewhere. You can go ask somebody what happened, or you can set up some legal action as to what happened. You can't really do that with DeFi. And I would challenge that DeFi as we know it today is not fully there in terms of decentralization, right? Like you have a lot of these decentralized protocols that have chief compliance officers, that have money services licenses. Like a true contract that's running only on code cannot have that, right? Like you should not be able to call yourself a decentralized entity and name all of your logos for your venture capital firms that have invested in there, right? Like that is not necessarily compatible with decentralized finance. So
I guess it's not that. Yeah. So I'm with you. And I'm not, it's like decentralized in name only, as they say, or, like that these platforms are not fully decentralized. I appreciate that fact, but it's more like, is there technology within the DeFi toolkit that can be applied to your business to make it better, right? And I think that you've answered that question quite well. Another thing that comes up a lot is this question around like DeFi specifically being highly inefficient at sort of pricing credit risk, because it basically offers the same like terms to everybody. Whereas, an individual based on their reputation, credit score, assets, and so forth in the real world could get a very different kind of loan from the bank than like the next guy, right? And so there's a second component of reputation that I think is really interesting. And I was actually having a conversation with your co-founder a year ago about this, just like an unrelated thing. And I raised this with Adam because I thought, like what DeFi and what this whole industry generally is missing is like a credit score based on your reputation in the crypto Web3 world. Like we already have access to credit scoring in the traditional world, via like Equifax and others. But is there a way to create a reputation for people who spend more of their time in this world? And I feel like that is something that is a natural fit for what your company does, because you're already providing financial services to people who maybe felt that the traditional world of banks didn't serve them correctly or sufficiently, right? And I think that that to me is this new frontier for not just for DeFi, but for all crypto asset based financial services, that instead of every loan needing to be basically over collateralized, is there a way to expand the franchise to people based on their reputation? So anyway, a thought, and I'm wondering if you just have any initial reaction to that.
So this is something that I've thought about a lot personally, just because I come from a country where there is no unsecured credit, right? And I've been always trying to figure out how you can do this. And where I land when I think about this is we all like to think about unsecured credit, right? Everybody talks about unsecured credit. The credit that we have in Canada and the United States, and we like to think of as unsecured, is not unsecured. It's secured by our social insurance number or by our social security number in the case of the United States. Why that's important is because if I take an unsecured loan with you and I don't pay you back, you can end my financial life by basically destroying my reputation to everyone else in this country. So it is secured by my reputation and by my single unique identifier that belongs to the government and that proves that I belong to this country.
Yeah.
So it is not unsecured. It is very much secured by you removing my ability to operate in the financial system in this world, right? And so the same holds true for Canada, and the same holds true for anybody that issues you a loan. They have to have some type of enforcement to the loan that they are issuing you. And they have tons and tons of data and history to know that if I'm debanked from the United States, I'm going to have to pay a lot more over the course of my life than for me to repay your loan, right? And so there's this big game theory that goes on with these social insurance numbers and these unique identifiers that tie me to my ability to open bank accounts, my ability to get a student loan, my ability to do anything else down the line, or get a job even, or not have you're soaring my score in my reputation file that goes on to the rest of the country. So that is going to be very hard to recreate in Bitcoin and in crypto in general. You can have all the reputations you want. Like, one of the things that I looked at a lot when we started Ledn was this concept of BTC Jams. BTC Jams was an unsecured Bitcoin lending platform that was built on reputation.
Yeah.
And what do people do? They start out really well. Everybody builds their reputation and wants to increase their balances and lower their interest rates. And then when they hit the peak of the reputation mountain, they take the loans, they never pay them back. Yeah, right. And then and it all comes crashing down. And so I don't propose to have an answer for this today. I've been, trying to flip and turn and figure out how to best get this done. But I just think that this goes back to people's understandings of this idea of unsecured. Your credit is never really unsecured. It's secured by something that someone else knows is valuable. And to your point about being able to offer the same terms for everybody, because that's one of the things that I feel makes me most proud about Ledn, is that somebody from Colombia gets the same interest rate as somebody from Argentina, gets the same interest rate as someone from Belgium, gets the same interest rate as someone from Sweden. Why? Because I'm not underwriting your reputation, I'm underwriting your asset. And your asset is the same in Argentina and Belgium and Sweden and Colombia. And until crypto, you could not do that with any other asset. So I think that this asset in particular, the fact that you can even level the playing field on the cost of asset-backed lending is a massive win for the world. The fact that somebody in North America can get 1%, or in the future, I see a world where I'm going to be able to lend dollars backed by Bitcoin cheaper and more efficiently than someone lending dollars backed by US real estate. Yeah. Why? Because it's easier to sell, it's easier to move, it's more accessible. It just makes sense. So if I'm working towards a world where if I'm Mauricio sitting in Canada and I want to get a Bitcoin backed loan, my rate's going to be 3%. Juan is going to be in Colombia wanting to do the same, and he's going to want to do the same rate. And that's going to level off competition, at least in the secured lending world. We'll tackle the unsecured lending when we can get there, but I think this one in itself is a big win or a net positive for humanity. And I hope that we get the technology stack we need to do unsecured credit in Bitcoin as well, or crypto as well.
Yeah, love it. All right. Well, I feel like this conversation could go on and on, but it's been really insightful talking to Mauricio. We really appreciate your time and insight. And we look forward to having you back on the show, in a year's time. We didn't really talk about what happened last year with some of the other players in the space, other than they obviously weren't running their business the way that you've just described it. And in a lot of cases took on excessive risk and had huge credit concentration problems with a handful of not very good actors. And that seems to be not what you're doing, which is good. And as a Canadian, really obviously pleased to see you and your co-founder, have been able to build this business, with a Canadian founding team and with Canadian people as well. And that, you're still at it. So thank you very much. This has been really great. That's it for this week's episode of DeFi Decoded. We will see everybody next week. We had a great show following up on our conversation with the head of CRAC in Canada. We're going to be speaking with the CEO of the largest independent Canadian crypto asset exchange about the state of things in Canada. We're not a Canadian show, even though I've mentioned Canada now 5 times in the last minute. But we're going to be talking about that just in the context of, what's going on in the US. Is there an opportunity for middle markets to distinguish themselves and step up and become leaders in this area? So that'll be an interesting conversation, kind of building on this theme, I guess, that we've been touching on for the past little while. Until then, we'll see you next time. I'm Alex Tapscott. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.